Welcome back everyone to the Audacious Money Witch channel, where we talk about the magic behind the stock market. What's up, Audacious gang? It is so good to see you. Everyone and their mom is totally bugging out about AI stocks, Nvidia, Palantir. It's like a whole vibe. But you know what? A real professional investor knows that growth can be found in the most unexpected places. Today we are going to talk about a stock that is like a total icon, Lululemon. Yeah, Lulu has been on a total gnarly roller coaster ride, and for the first time in ever, it looks like it might be down bad. The stock is down over 50% from its high, but does that mean it's over? As if, because a total legend just made a huge bet on it. I'm talking about Michael Burry. You know, the guy from The Big Short. So, is this a buy now? Let's get into the tea. The Lululemon vibe. First things first, Lululemon is like a total brand powerhouse. For sure, they've spent 2 decades building this prestige that makes people willing to pay triple-digit prices for leggings. It's a whole lifestyle, you know. It's a huge club. One of the reasons their brand is so strong is because of their direct-to-consumer sales. That's when you buy directly from their website or stores, not from another company. That makes up about half of their revenue, which is so amazing because they get to control the whole vibe, the quality, and for sure, all of the money. Those sales have the richest margins, so they keep more of the cash. You know. But it hasn't been a smooth ride after the pandemic, when we were all wearing leggings all the time. That momentum totally cooled. Now Lululemon's a little nervous. Revenue growth has slowed down. Competition is super intense. And this is the worst part. New tariffs from President Donald Trump are totally weighing on their costs. It's a whole thing. They even had trim their profit outlook for the year. It's so intense. The Big Short, the big buy. Okay, so here's the plot twist that everyone's talking about. Michael Burry, the guy who totally saw 2008 housing crash coming, he just went on a shopping spree for Lululemon stock. According to his 13F filing from the second quarter, he scooped up 50,000 shares. That's almost $12 million. It makes Lululemon a 21% weighing in his portfolio. He's so good at spotting opportunities where everyone else is bugging out. So for him to make this huge bet is a major vote of confidence. It's got everyone on Wall Street talking. So the big question is, should we totally buy Lululemon stock now too? The bear case, down bad. Before we make any decisions, we have to look at the gnarly stuff. The easy double-digit growth days are totally over. Management said they expect revenue growth to be only 5 to 7% this year. That's a far cry from before, for sure. And when you look at their last earnings report, the tea is, it's not all good. Revenue was a hair above what Wall Street expected, but the cracks are so obvious. Sales in North America, which is their core market, were down 2%. What? And even though their gross margin was okay, their operating margin totally slipped. Why? Tariffs, higher costs, and this is a huge red flag. Their inventory is so high, up 23% from last year. That's a signal that they might have to have a ton of sales, which will totally cut into their profits. And on top of all that, they even cut their full year profit guidance. So even though they beat earnings, the stock totally got hit. And that's why it's down almost 54% from its 52-week high. It's down, so down bad. The bull case, total comeback. Okay, so now for the good stuff, the comeback. Even though the stock is so down, there's a total bull case to be made, for sure. First, the valuation. The stock is so cheap right now. Its forward price to earnings ratio is around 13.4, and its historical average is like way higher. That means the market has already totally priced in the slowdown. So there's a ton of room for the stock to go up if things just get a little bit better. Also, Lululemon has some major growth levers. Their loyal customer base gives them total pricing power. They can raise their prices and their customers will still buy their stuff. And they're only just getting started in other markets. Their menswear is not even close to being big enough. And their international sales, especially in China, are totally on fire. It's not even big enough yet to move the whole company, but it totally will if they keep growing. So even though the hyper growth days are totally over, if they can execute on their plan, that could push earnings up and get the stock's premium valuation back. From the looks of the Lululemon chart, it looks like the stock has finally bottomed. I am 88% sure for the reasons that Lulu stock has just gone through 2 ABC correction patterns on their chart. The first wave is from the all-time high of $516 at December of 23 to August 5th of 2024, low at $226. That's wave A. That's almost a 56% correction. Then we had our first bounce, which was wave B, an 85% bounce to $423, happened last holiday season. Then we have wave C crash from $423 to $186 August 11th. The wave C crash was exactly the same percentage crash, 56%. It's almost symmetrical to perfection. When you look at the MACD, there are positive divergent building for months. So even though previously I called the kiss of death still triggered and ongoing, after Michael Burry bought and made Lulu his second biggest position in his long portfolio, the fear in the market has almost disappeared. Unless we have a major crash in the market next, I am 88% certain that Lulu stock has bottomed for now. September 4th, we will find out for sure if I'm right or if I'm wrong. I guess we lost the chance to buy at $130 for Lulu forever, but at least I bought at $190. Final vibe check. So what's the verdict? You've got the good, the bad, and the gnarly. The stock is down and the growth is slowing. And there are some major headwinds, but you've got this iconic brand and a total discount on the stock, and the world's most famous value investor is betting on it. For a patient investor, Lululemon could be a really compelling bet. They're still growing, they are cash loaded, and they have so much brand power. So are you buying the dip? Let me know in the comments below. Don't forget to totally hit that like button and subscribe for more rad stock analysis. Thanks for hanging out, Audacious Gang. Peace out.